We've got with us Bob Rice. He's a general managing partner for Tangent Capital. John is with me as well, who's been on the Groupon and the Yahoo story. And I think, what do you think of Ackman's comments? A complete disaster. Would you have to agree?
Well, complete's a strong word.
So disaster is not the strong word.
Disaster, look, I mean, they haven't known what they wanted to be when they grew up for many years at this point. They're not a player in any of the big megatrends, social, local, mobile. They don't control an operating system. They don't control a handset. It's very problematic when you think about their strategic position to understand where you're ever going to get a growth story out of this company from.
So if you are a shareholder of Yahoo right now and you're saying, okay, there's this interim CEO, they're going to look for somebody else, maybe they're going to sell part of the business or sell the business, what's going to happen?
Well, I think a lot of people are saying, look, this is dead money for a significant period of time. Kara Swisher said today, you know, here come the suits. They're going to bring in, all the consultants are going to come in. They're going to do a lengthy study. Meantime, all the talented employees who are fed up with the uncertainty are going to be heading out the door, and the company's going to be bleeding value. I think, frankly, what they need to do is say either, yes, we're going to break it up and do it quickly, or B, articulate a battle plan which would be around monetizing the traffic better that they have. They have very good traffic, but they tend to just hand it off to other people to monetize.
Right.
If they monetize it themselves, they might have a better crack.
But you think what's happened with Yahoo in the last few years is a Yahoo problem, or it's a Carol Bartz problem?
I don't think it's a Carol Bartz problem. You know, they've been through several failed CEOs. They just didn't have, you know, all that Yahoo has ever been is an eyeball aggregator. And there was a period of time when that was a very, very valuable thing to be. But these days, it's all about specialization, not generalization. And they're a general website. And I don't really think that it's the CEO's, any given CEO's fault, except to the extent, perhaps, that somebody failed to articulate a really powerful new vision for the company.
And outside of the CEO, now this puts more pressure on the board. Something I highlighted this morning is that you've got at least 6 of the 9 board members who are 55 or older at Yahoo. You've only got one person over the age of 55 at Facebook on its board.
Yeah, that's an interesting point, right.
But the other company, though, Groupon, you actually think the problems are resting with the CEO and management, though, right?
Yes. I think that Groupon seems to suffer from a kind of Groupon exceptionalism, that none of the real rules apply to Groupon. You know, like they get to generally accepted accounting principles. Well, you know.
They get to make up.
Yeah, let's make up some new terms because those don't really reflect us because we're so special. And by the way, the quiet period rules, you know, who needs them? I mean, really, this is a great company, and if I'm annoyed that people are criticizing it, I'm just going to fire off a mass email to employees, which I'm sure is going to get leaked out to the public because I'm just upset. And it just, frankly, just bespeaks a lack of maturity in the management team, I think.
So what do you think is going to happen?
I hope that the SEC tells them that they've got to delay the IPO, and I think that's the real reason here. I think the SEC...
So you think the regulators have requested it?
I believe the regulators have told them you're going to have to redo your paperwork here because the CEO and the chairman of the board have both made pretty extraordinary comments during the quiet period, which is, you know, sacrosanct in IPO land. I mean, that's the one rule everybody knows you don't violate, and you've got 2 of the most senior guys violating it kind of with impunity. If the SEC doesn't or hasn't told them to slow down and refile, they're going to destroy the quiet period rule. I think the SEC has to do that.
The significant event we saw earlier this year was LinkedIn going public, and then everybody followed.
Right.
If this IPO doesn't happen, does that mean we're not going to see Zynga go public? Is it possible Facebook might put off going public for an even longer stretch?
I think that there are a couple of things that are going on here. As we've discussed before, some of these tech IPOs, they don't really need the capital to run their business. It's not like the traditional sort of thing. And so they're trying to time these more precisely to market moves because they want to maximize their cash out value, as opposed to simply looking at building a company over many years, in which case 10% more or less doesn't really matter when you go public. But I do think there are going to be some real problems now getting these companies with unproven business models out the door. I think we've seen the peak of the tech bubble is in the rearview mirror at this point. Valuations are going to continue to drop here. And it's not just because of market turmoil. It's because we were in a tech bubble.
Right, which you have said many times before. So ultimately for Groupon, though, you think they're going to be able to pull off the IPO, or do you think that maybe Google is going to come back to Groupon, or someone else will come back to try to acquire it?
Look, it's a really great question because, as we've, again, discussed many times, they really don't have a defensible business model here. And as Living Social and countless other companies have come in and have proven that. And so when you're in that kind of a situation, the only thing that investors are really betting on is the management team. And we've discussed the perception of the management team already.
Yeah.
So I think that they're going to have a struggle to get out at what they would consider to be a really great value. But I don't think that the Google offer is on the table anymore. I mean, why should it be? They've already now launched a successful business. There are all sorts of companies, if they really wanted to aggregate, that they could buy for a fraction of the price. So I think they may have missed their best opportunity.
And maybe they don't want to buy that management team that you just talked about, Bob. Thank you. Great to see you.
Thank you.